Where does my money go when the stock market crashes? If you've ever felt like your investments just vanished during a downturn, this video is for you. Imagine you bought a nice new car. One day its value drops because a newer model comes out. Did your car vanish? No, it's still there. It's just worth less. That's a bit like what happens to your investments in a market crash. But let's dive deeper. Now, before we start anything, it's important to understand the stock market. It's like a huge marketplace where people buy and sell shares of companies. When you invest, you're buying tiny pieces of these companies, and the price of these shares goes up or down based on what people think they're worth. Now, what happens during a crash? A stock market crash is when prices of most stocks are falling sharply. It's like our car example. The value of your car, or in this case, your stocks, decreases. But just like the car, the stocks don't disappear. Another example could be like your home's market value. If the housing market crashes, the value of your house might go down, but your house doesn't disappear. It's still there, just valued less at that moment. Now, a lot of this comes down to investor sentiment, which is basically how people feel about the market. If investors are scared and sell their stocks in a panic, it can cause the market to drop. It's like a big sale at your favorite store. If everyone rushes to sell their goods quickly, prices drop. In the long term, the market has historically recovered. It's like weathering a storm. Yes, the value of your investment goes down during a crash, but if you hold on to them, they might regain their value as the market recovers. Just like your house might regain value over time. With all said and done, so what do you do during a crash? Panic selling often leads to guaranteed losses. It's better to stay calm and think long term. Remember, you believed in this ETF or company, so now that the prices are lower than what you bought it, you should be willing to average your costs down. Finally, diversification is key. Don't put all your eggs in one basket. At least let that basket contain so many stocks if you're gonna do that. But by spreading your investments across all different types of assets, you can reduce your risk during market downturns. In conclusion, your money doesn't disappear in a stock market crash. It's the value of your investment that decreases. But with patience, a long-term perspective, and smart diversification, you can navigate through these downturns. Now, if you found this explanation helpful, don't forget to leave a thumbs up and subscribe to this channel if you haven't already. Till next time, I'm Peter, and I'll see you in my next video.